Welcome to Alan Berry Reports TV. I'm your host, Alan Berry Labucan from AlanBerryReports.com. So a couple days ago, one of the big market pundits for gold, Dennis Gartman, talked about why he thinks that the bull market for gold is over. Or he also hedged his bets a little bit there, but that was the gist of what his comments were. After that, some folks that are bearish on gold came out and made some similar comments. In fact, Nouriel Roubini had some more comments out, and a couple of years ago he made some comments that we disagreed with completely, and then gold pretty much doubled, and so his bearish comments were not too correct. And we have some opinions about why we think that these latest bearish comments by Dennis Gartman and others are going to be proved wrong. And that's what we're going to talk about on today's show. Before I get started, though, I wanted to just let everybody know that all of our subscribers and anyone who visited our website in the last day or so will know that we started a new section or added a new section to our website. If you look above me, you'll notice that we have a shop section. In that shop section, right now we only have one offering, and that offer is for anybody who wants to receive private reports. These private reports will be showcasing our strategies and our picks on a more looking at timely issues as well. And so that doesn't mean that we're stopping doing a lot of the work that we do for free. We just wanted to put out a report that is to monetize our work, and we felt that the private reports would be the way to go. So if in the future we're also not just going to sell them on an annual, yearly type of a way, we're also going to be offering individual reports. So keep in touch with that. If you're not already on our email list and want to be notified when those reports come out, just look above me on the website. There's a email subscription, or as also down in the bottom right left of the website. To my left of the website, you can sign up for our emails, and that's how we keep everybody informed on what we're working on, and also about the reports as they'll come up. So now that housekeeping sort of issues are taken care of, we do have a few bills we got to pay for ourselves, so that's our commercial endeavor. So the show today, the commentary we want to talk about today, I put a title on it of news about the death of gold bull, greatly exaggerated, and why I think that guys like Dennis Gartman, he is a very high-profile guy. I don't totally understand why he is so high-profile when it comes to the gold market. I've followed a lot of his comments over the last few years, and oftentimes he gets it wrong almost as much as he gets it right. And so, why people put a lot of weight in what he has to say, I'm not quite sure. But he definitely caught the market's attention yesterday. It didn't help the downward movement at all that he made those comments when it looked like somebody with a big position, probably a hedge fund of some sort, maybe had some margin calls or was trying to lock in some gains that maybe they took a position early in the year and they wanted to end the year by locking in those gains. And so they seem to be doing it unrelentlessly, which sort of gives me an indication that I think that it was some kind of a margin call or a cash crunch of some sort. And so it was getting beaten. Dennis Gartman made some more comments, got beaten on some more. He looks like a genius today. I think over time he's going to prove to be wrong. And why I think that guys like Dennis Gartman and some of these other so-called experts get it wrong is because their focus primarily is on the trading pattern of gold. In this case, he's a technical analyst by and large, and so he looks at how things are trading. And I've always had our focus in our reports and in our shows, how we pick companies when we go on TV and stuff like that, has always been focused on looking at the fundamentals of what's going on, and also using technical indicators for timing purposes. And so, where I think that sometimes you can get these timing indicators that don't necessarily, why they can be wrong often is because they don't take into consideration what is going on fundamentally. And if you look at the past decade of the bull market for gold, what really set the stage for that bull market is the fundamentals, not the trading pattern, the fundamentals. Back in the 1990s and in the 1980s as well, investment venture capital was chasing after, and investors were chasing after the next big .com type of a company. And while that was happening, not enough money was going into exploration to find new discoveries, in this case of gold. That is happened in a lot of commodities other than just gold, but today we're talking about gold. And so during the 90s, the industry had not been finding enough new discoveries to replace what they're mining each year, and this has created a long-term weakness in the supply of gold. Now, at the same time, and this point gets missed a lot by many market pundits that comment on gold. They talk about, it doesn't have an intrinsic value and issues like this. When I hear that, it sends off a signal to me that this person doesn't really know what they're talking about. When you have the two most populous countries in the world, China and India, that are growing rapidly, their middle class and their upper class for that matter, and the people in those two countries love gold. They like to adorn themselves with gold. They like to hold gold as a store of their wealth. Whatever you want to call that, you want to call it no intrinsic value or emotional or whatever it may be, the reality is that there's a lot of people in China and India that are buying gold. They are the primary demand of gold. Now, you get these other demands such as ETFs and other things like that also create demand for gold. But the primary drivers of physical gold buying comes from China and India. So to ignore, to dismiss gold and say it has no intrinsic value and other issues like that, just really loses sight of reality. And when I hear that, it tells me point blank that this person does not care about the fundamentals of supply and demand and is only making comments based on what the trading pattern is. And so that's what the context of where I think Dennis Gartman and his and other people like Nouriel Roubini and people like that make these comments, I think they're just looking at trading patterns and totally ignoring the fundamentals of supply and demand. And supply and demand is why we've been bullish for many, many years, and nothing has changed. If anything, the supply chain is getting weaker. Since the economic collapse in 2008, the exploration throughout the world has really declined rapidly, and it's declining at a time when, if anything, just to catch up with the demand or the supply chain's inability to feed the demand, we need to be finding them much more rapidly, and that requires we need to find new gold mines much more rapidly, and that requires a lot of exploration. We're not having a lot of exploration, and so if anything, the gold supply is getting even weaker. And so that's why a few months ago, we talked about reasons that we are as bullish as ever on commodities and gold in particular, and nothing has changed, regardless of these big splashy comments that guys like Dennis Gartman and Rubini and others have made. The fundamentals haven't changed, and so we're just as bullish as we've ever been. Just looking at my notes here. Just to get on topic here, talked a lot about the reasons that I disagree with that call, and basically it comes down to fundamental reality. We have declining production. When commodity prices reach record highs, the Economics 101 tells you that the supply should increase when that happens, and what we're actually seeing is supply decreasing. The production is decreasing as we're reaching these record highs. So the idea that this long-term bull is over is just beyond reality to me. We're just not, as I said earlier, we're not finding enough new discoveries to replace what's being mined every year, and the supply has not been able to keep up with demand for a long time to start with. And so on the fundamentals, I think that that the argument that the bull market for gold is over is losing sight of the reality of supply and demand. I talked about the demand from China, India, developed countries. There's if anything, the central bankers of the world, which had during much of the 80s and 90s had been big sellers of gold, now they're turning into net buyers. And so there's plenty of buyers out there for gold, and I think that this short-term weakness is nothing more than a trading situation, likely somebody getting blown out of a position, and therefore we're coming into a situation where we can get some great bargains. And that's ultimately I'm not really looking at shows to be confrontational. I'm not afraid to be confrontational. Sometimes I actually enjoy it. In this case, I enjoy it because I relish the chance to see that somebody who's making a big splashy comment can be proved wrong, and I think the markets are going to prove them wrong. So going forward, what I see happening right now is there was already some seasonal weakness before gold started getting beaten down recently. And so the seasonal weakness had created some real good opportunities in gold stocks. And I'm very bullish on the price of gold. I'm even more bullish on gold stocks. Gold stocks are trading at a significant discount. In fact, it reminds me, I think that gold stocks are really trading like they did when gold was trading at about half the price it currently is. And so there's one discount that you're getting. This fear that's out there in the market in general, adding more to the discount. Seasonality is adding more to the discount. And so I see that anybody that's buying high quality gold stocks during this last couple months or couple weeks of the 2011 and into the early couple weeks of January are going to be well rewarded in the first quarter and the remainder of 2012, because I think we're going a lot higher on the price of gold into 2012. I'm not going to talk about specific prices because at the beginning of 2012 we do our annual Outlook 2012 in this case, and we'll be talking about some specific numbers, and so I want to leave the actual price out, but I don't mind saying that I think the trend for gold in 2012 is going to be bullish, and I think it's also going to be extremely bullish for high quality gold stocks. And so if you're wanting to that's the sort of strategy. If you want to find out about our individual companies that we're bullish on, first of all, the best way now is to be a subscriber to our private reports. That's where we're going to be looking at these strategies in more depth. and coming up with specific picks. And it's a great way to keep track of the companies that are, the picks that we're making and the strategies that we have. And we'll continue to talk about those issues on the shows as well. But if you want specific picks, that's the best way. Now, also, another way is if you look above me on the website, you'll see a show's ABR TV guide. And over the last couple years that we've been doing these shows, we've talked about a lot of companies. You can find all of those companies in the TV guide section in the outline of each show. And that's a really good place for you to go and find companies, to create a shopping list of companies that you got to go do your homework on. And I think you'll find some really great winners in there as well. So, we don't think the gold bull is over. In fact, if anything, we think it's got a lot of legs left in it. This short-term trading situation has created some great opportunities to buy gold and gold stocks at bargain prices, and I think that those that do that will be handsomely rewarded as we go into 2012. So that's our a wrap on our commentary today. Before closing, I want to stress that this show and our reports, all the work that we do is for information purposes only. We aren't making buying or selling recommendations. It's important for you to do your own research and speak with your financial advisors before making any investment decisions. Also want to send out some thank you messages to we use youtube.com as our primary website to produce and broadcast these shows. They've got a great website for anybody that wants to do online shows, and we highly recommend them. And also for anybody that wants to watch videos about topics that they're interested in. We love videos. Check out youtube.com. Also, if you look to the left of me on the website, we have banner sponsors. Those banner sponsors are really important in us being able to do the work that we do. If you'd like to do some homework on those companies, just click on their banners. It's directly linked to their websites where you can find plenty of information about these companies, what they're working on, and be able to do your homework. And of course, to you, the viewers, if you didn't show up, we wouldn't have a reason to do the show. So we thank you very much for tuning in and watching our shows. So before I finally close, wanted to also say that we're referrals is the best way to gain traction, whatever you're working on, and a lot of our viewers and readers have been helpful in that regard, and we encourage you to send out messages and let people know about our shows, our websites, and we really appreciate that. And so on that note, again, if you want to keep track of everything we're working on, sign up to our email. There's no charge for the emails for updates, and we keep you updated on everything we're working on. So on that note, have a great day, and we'll talk to you soon.